This is Smart Investing with Mike.wren.
Securities and advisory service offered through KMS Financial Services.
This is Smart Investing with Michael J. Wren. With Michael's producer, Chris Martin. You can email us your questions. Go to smartinvestingshow.com to see how.
For I have the pride, the privilege, nay, the pleasure of introducing to you the one, the only.
This is Smart Investing with Mike.wren.
Well, hello there, everybody. You have downloaded another episode or just pressed play on another episode of the Smart Investing Show. I'm Mike Wren, your host. The producer extraordinaire, Mr. Chris Martin, is across the table from me, like always. And this is the show where we try to take the topic of investing. Number one, we try to make it easier to understand. Number two, we try to get you good, relevant information on each and every shoe. And thirdly, we try to be entertaining. And with the entertaining portion, typically, it's most of the time Chris, but sometimes I get in a good one. You know, sometimes. Sometimes. It's occasional.
Sun shines on a dog's butt at least once a day. Huh?
Yeah, exactly. So, good morning, Mr. Comic Con Man. He's got a San Diego Comic Con t-shirt on. He is probably the grand marshal of the Spokane Comic Con, and that's going on this weekend. So, welcome, Chris. Welcome. I'm glad that you're here to be interviewed by me today.
Thanks. I've been all right. Things have been going good. Actually, there's a Z Nation. They're selling off their wardrobe because they canceled the show. And so out in Spokane, there's a warehouse where they're selling out all their clothes and stuff. And I was on an episode. Mm-hmm. So I'm
just
hoping
one?
to. Yeah, it was like 2 minutes. But I'm hoping to go there and find that wardrobe that I wore so I can cosplay as myself.
Oh, yeah.
I'm going to turn narcissistic into like just full circle.
Mm-hmm.
Yeah.
So today's show for everybody might be a lot of me just talking with Chris, trying to talk with you out there, trying to imagine questions or concerns that you, the listener, may have, and me addressing those. I don't have a normal bullet point sheet that I usually have written up today. And sometimes it's just a little bit hard for me to think of things to say because my world, which is based in what's called reality, is so much different than the emotional world of a lot of investors. And obviously it's different than the world from the journalistic point of view because journalists are trying to think of stuff to write about every 12 hours or every 24 hours at the latest. So let me just be a spoiler alert for what the rest of the news for the rest of the year is going to be. It's going to be headline A, markets are up because trade fears have subsided and the 9-year-old has tweeted less, or the market is down because trade fears are higher and the 9-year-old in the office in the White House has been tweeting more.
I go to FARC. It's like a web.
I've heard of it.
Okay,
Mm-hmm.
So it's like sarcastic web. But I remember a couple of months ago it was markets are up because of tariffs, and then right underneath it, markets are down because of tariffs. It was just two different websites on the same day.
That's what I see every day. That's what I see every day. That's how come I'm so sarcastic, nonchalant, don't give a you-know-what about what the journalists say. Truly, I'm not trying to be funny to you this time, you the listener.
You're doing a great job.
Thanks. The rest of the year, there's probably going to be another big news item somewhere, somehow, some way. But anyway, most of the time it's going to be just like Chris said. Markets are up because of lowering trade fears. Markets are down because of increasing trade fears. Maybe you could add in there interest rate increases or non-increases by the Federal Reserve. That's it. So me telling you that, you are free to have a normal, fun-filled summer and fall, doing whatever it is you wish to do and not caring one whit about the journalistic views of investments. They don't matter. They're not fun to read most of the time. So that's tip number one. You can ignore CNBC clear till, for sure, the summer. You could ignore it for the rest of the year. You could ignore any article in any financial publication that doesn't talk specifically about a company. If the article is talking about some world economic view, you can flush it down the toilet because they don't know what they're talking about. And if they did know what they're talking about, sometimes it's kind of hard to find those fun, esoteric articles. Like, here's an example. When I say Chinese economy to you, Chris, what do you think of? Strength, size, stuff like that?
Yeah, just all the goods and stuff that they make.
Sure, okay. Well, do you have any idea what it might be, what the economy might be if somebody actually lives there in China?
The only reason I say probably bad is just because I've read a couple articles.
Okay.
But
it's actually
a hard workforce, I guess.
Yeah, it's I don't even know straight away.
And I just know off these articles. It could not be that way.
The economy as a whole in China, the Chinese economy, has been growing by leaps and bounds, kind of akin to how our economy in the United States grew before the Great Depression, and maybe a few decades after the Depression as well. Because what they've been doing is they've been converting goat paths to super freeways. They've been converting horrible housing to super sky rises.
Mm-hmm.
They have been doing that stuff. Have their consumers, have the average Chinese person, have they been consuming tons and tons and tons and not saving as much as they used to? No. They tend to be savers, and they tend to not consume so much. That being said, you have people like Starbucks, you have different American corporations that say that their earnings are growing in China. Well, when the population is so big, when you're dealing with so many when the number is so big, if people are just doing it a little bit, it's going to move the needle. But as a whole, the Chinese economy is coming up to a change point. The change point is that you can only build so many roads. You can only build so many.
Your country's only so big.
Right. Well, and it's just needed. You can only put so many of the people to work together. And I mean, a bridge that's needed does improve things. Just think of a north-south freeway here. A north-south freeway finally here will improve the ability for a normal person to drive from the valley or the South Hill and get to the north side. Mm-hmm. Right now, if you're in the valley and you're driving up to Windermere, that is a 40-minute drive. When you're close to I-90, 40 minutes gets you past Coeur d'Alene and well on your way to Montana. That's a big distance covered.
It kind of cracks me up that there's a rest area in between Coeur d'Alene and Spokane.
Yeah. Well, I remember it. Well, there didn't used to be continuous housing between there.
True.
I'm a little bit older than you, well, a little bit, and we used to live over in the Silver Valley. And so when we would come to Spokane, there was a gap somewhere. Oh, yeah, there was tons of gaps, sparsely populated with trailer parks, but there were tons of gaps. So anyway, what I'm saying is the ease of travel in certain directions here, it doesn't work. The ease of travel, for example, in Seattle isn't working anymore. Okay? When you're trying to get certain directions, it's just not working. And so if you improve those bottlenecks, you're going to get some improvement in the economy. And so that's been happening with China. But you can only do that for so long before you have to change the economy. The economy has to kind of go from building bridges and roads. You kind of have enough already where every road and every bridge built doesn't really add that much. You don't get that much of a payback. And so to get your economy going, you kind of have to do a little bit of a switch where you try to get the people that live in the country, in the economy, to start to consume more of their own stuff. You actually want their savings to go down a little bit and their consumption to go up, because the companies that used to be building roads and bridges are going to be shrinking. So what else are you going to do? How else are you going to serve the people? Well, then it kind of starts to become an economy that's a little bit even more like the U.S. then, where it's a little bit more focused on consumption rather than building roads and bridges and stuff like that. And it is a big deal. And if you're listening right now and you think that I'm talking out my butt, I'm not. This is a factual thing that has happened with every economy in the modern age. It happened with the United States. It's going to happen with China. It happened with Japan some years ago. It just happens. And how the country deals with it and with economic policies is a big deal. And so these trade issues that are hitting China, the trade fighting between the U.S. and China, people don't realize the little esoteric stuff going on, that China wants to build more things and sell them abroad, but they actually want their own consumers to start buying more things fairly soon thereafter. So it kind of puts them, on one hand, a pretty good position to start fighting with Trump, because they don't care as much about the trade imbalance as Trump does, because they want, if you've got an economy, if China is building a cell phone, it's much better for their economy if the people buy that cell phone than one made someplace else.
I was going to say, can't they just go, oh, look, America doesn't like us. What about this? I just kind of
that's what they're
more
kind of
force the people to buy their own stuff.
No, it's not really a force. All of a sudden,
just kind of they can advertise it more like, hey, look,
it's a united front. Then China,
we're all on the same team.
Exactly. China can say, we're trying to. The colonists in the Western world are trying to affect our future again, and this is how we can help fight that. So China, on one position, is actually a little bit better, where Trump says, it's going to hurt them more than it will us. He's not really it's not really that intelligent of a comment. But by the same token, the other side of the equation is, as their economy has got to change from building roads and bridges to consumption, that's an inflection point that's hard to manage. It's basically what has to happen also in another weird way. If you, the listener, want to dive deeper into this, there is a professor of economics. His name is Michael Pettis. If you search that name in Google, you're instantly going to see him writing articles for Google and so on. He's a professor that actually has taught and lived in China, and talks about how there's got to be a little bit more of a wealth transfer to help that along. Kind of like what happened in the New Deal after the Great Depression when Social Security was enacted. If you think about that, Social Security didn't exist before then. Okay?
Yeah, that's something I don't think about.
Yeah, most people don't. There wasn't that social safety net prior to the Great Depression. It was part of the New Deal afterwards, and there was a big uproar with that. And it was people wanting to make sure that there was a generalized safety net for the population. And in very real terms, that's a bit of a wealth transfer, isn't it? You take a whole bunch of the money that's the haves, and you're making sure that the have-nots have a little bit of a safety net. And of course, you have if you're talking a very narrow-minded, oligarch, an oligarch of the United States, they might be, it depends on their personality, they might be totally against that. But in reality, if you can make the majority of the population more comfortable, if a person's comfortable and they have a little bit more jingle in their pocket, what are they going to do?
You won't spend it.
Right, which is consuming. They're going to go to the 7-Eleven more often, the movies more often, and so on. And so initially what Michael Pettis, this professor's talking about, is when you've got a big economy, sometimes you go through inflection points where and this sounds weird coming from me because I am a fiscal conservative because I just believe that way. But I'm also realistic enough that if there is no social safety net, people might start shooting at me when I drive by in my Lamborghini Rolls Royce. I'm an easy target. You know what I mean?
Why are you driving by the Billies anyway?
I am a realist like that. So there's occasional points in history where actually if you do a bit of a wealth transfer, a little bit of socialness like that, it actually ends up helping the economy in general because it makes everybody kind of more productive, that somebody's not, not being pressed upon by the economy so much that they don't know what's going on. And
everybody
it's
works
a tricky thing.
Better when they're relaxed and they don't have anything to really worry about.
Well, yeah,
like,
and do you remember the CCC, the Civilian Conservation Corps, that was started after the Great Depression or during it, where the government...
I wasn't around that time.
I was. Yeah. So anyway, unemployed men, they put them to work in work camps, and they built a lot of the campgrounds and road. I think maybe even certain roads in Glacier Park and so on were built by the CCC, and just putting people to work, making sure they were fed, making sure that they were making something. It was a big deal. It was a really, really big deal. And so I know that I'm not even going to go into the news of the United States right now. It's not really, maybe it's not as important worldwide as what the Chinese economy does. It probably is. So anyway, that's what you don't hear from the news. Those articles are kind of hard to read. They're kind of hard to get through. And unless you have a background in a little bit of true economics, how a country works, they're going to be hard to read. But an article like that can be actually quite informative. It's like, okay, this is why Mike is saying that most of the journalist stuff isn't worth reading, because it really isn't. It doesn't get right down to the nitty-gritty. And let's be frank, you see an Arby's commercial, you see a McDonald's commercial, they're trying to get you to go buy their sandwich within that day or week, aren't they?
Yeah.
Okay, well, when you see a headline at CNBC, you see a headline on Forbes or Business Week or Barron's, they're trying to get you to read it. If you see and if you're on the internet, think of how much choice is on the internet. When you open up your home screen, whether it's Google or Yahoo or whatever, but anybody uses, think of the choice there. That's why they have that clickbait there. Well, that's why they try to make the topic.
I am clickbait. Let's not forget that.
Well, that's why they
have been used.
Yeah, that's why they try to make the topic kind of so outlandish, because to get that click now, actually in some way, shape, or form is providing a revenue stream to somebody out there. That's a proof that, hey, you clicked it, you downloaded it.
Right.
It doesn't matter if they do it out of anger or out of joy. It's a download.
Like every banner, I think, is like 2 cents for a click or something.
Maybe, yeah. So that's kind of how it works. So you've got all of this, all of these entities competing for your eyeball, and now they can get to your eyeball through your phone, through your computer. Your TV at home is going to be a normal TV plus a smart TV. Think of how many places that technology and information can try to grab your eyeball. So that's why I try to do the opposite. I'm extraordinarily militant in what I read and what I don't read. I'm very discerning. Most of the stuff, what is this about? Sometimes if I'm in that sort of a mood, I just have a fresh razor blade and I just start cutting out the pages of the magazine. It depends on the mood I'm in. The stuff that I don't like, I'm cutting away, or I just flip through and cut out the 1 or 2 pages that I do like, and that's it, and I throw everything else away. I literally do that.
Seems extreme.
It's kind of satisfying. Screw you. Cut out that page. Oh, this guy again.
The thought of you sitting in your office with a razor blade cutting out letters.
I have several.
Do you save the letters for ransom notes later?
Well, yeah, ransom. Where you cut out each individual letter.
Yeah, don't throw those away.
So anyway, there's a couple things. What do we talk about? We talked about the media trying to get your attention. We talked about maybe the Chinese economy. Here's something else that came to my mind. You have a lot of investors and normal folks that tend to complain about the stock market going up and down. They complain about the economy and this and that. Do you ever hear me complain about the stock market or the economy? No. I complain about you, the person, the way the people that are relating to that. I have no problem at all with how the markets work.
I don't have a problem with the movie I'm watching. I got a problem with the audience watching it.
Exactly. And so that might give you a little bit of an insight there as well, as to, he does it as a profession, and he hasn't starved to death. He's actually, successful at it. And, okay, why? Well, that's one of the reasons.
Well, I hear what you're saying about your years of experience, but I saw a pie chart once on the internet, and I think you're wrong.
Exactly. Might as well be.
Yeah, because I don't know. Those are the people that are going to complain about you. You know what? I read an article. I know you have years of experience, but the other day I read an article.
Or somebody emailed me something.
Right. And you know what that article was? His boss went in and went, I need you to write an article this week or you're fired. Okay.
Yeah, or
grab the nearest thing.
Mm-hmm.
But I know what you're talking about, too, with the clickbait stuff. It's like at work, when I need to bring up something, our home page is, I think, MSN or something like that.
Okay.
And usually the first one, you won't believe these 10 things that airlines won't tell you, And,
yeah.
And there's 5 things in your silverware drawer that can kill you. And then you click it, and they're all 5 knives. But they're little things that, you're like, if you eat this during the week, you'll get fat. Mm-hmm. So you click on it, and that's it. Ice cream. Well, why did I click that? And every time you tell yourself, stop clicking that.
Exactly. Here's another point of contention. It's not just that the media is trying to get your attention. The media isn't running any business. There was an advertisement here somewhere in one of my financial publications where there's going to be a large money convention in Seattle.
I might want to go to that.
Well, we're talking, it's going to be at the downtown Hyatt. Maybe I can flip through it.
A money convention.
Yeah, I mean, God.
Is there guys there, like, is Warren Buffett there signing dollar bills? Is that?
Yeah, probably. I don't know.
Photo ops?
Here it is. Yeah. It's called The Money Show in Seattle, June 15th and 16th, the Hyatt Regency in Seattle. And it says, get expert guidance to build a more profitable portfolio. Learn the best strategies for stock picking, income generation, and high probability trading from the best minds in the industry. And there's a list of these people that I'm thinking that they typically appear on CNBC. You've got Steve Forbes, Ralph Acampora, James Stack, Paul Merriman, Marilyn Cohen, Keith Fitzgerald, and Fitzgerald is hyphenated. Why would
he took his wife's name?
Jack Albin, Mark. Okay. So there's all these people. And exhibit hall with dozens of leading companies, all free with your registration at seattlemoneyshow.com. And it's sponsored by Tasty Trade, Treasure Investments Corporation, National Retail Properties, TIAA Bank, Barron's, and a name I can't even pronounce. So, and Barron's, of course, it says media partner. Really? You think? Here's the problem with that. You don't go to that. None of those guys run a business. So if they don't run a business and they're in the business of evaluating other businesses, I think there's a problem with that. If you've never run a business, if you're an accountant and you know managerial accounting and you know how to evaluate a company's profitability and its debt ratio and things like that, those things are extremely valuable. So you could actually stumble your way through very, very good investment technique. I'll try to speed up my speech cadence. I think I was slowing down. You could use those things to your advantage in the investment world by probably doing much more in-depth looking at a company's profitability than a hell of a lot of other people out there. So it would be an advantage. But what's not an advantage is that not ever being in a company yourself, not being in a pretty high managerial position or an entrepreneur to where you just have more of a feeling of how reality is. Because looking at the financial statements and so on, they're quite helpful. And if you know how to read those backwards and forwards and get a lot of information out of them, it's extremely helpful. But it's also extremely helpful seeing how a company actually sells stuff, sells its services or product, deals with customers, things like that. A case in point is that here's one reason why the companies like Microsoft and Amazon, why they have a huge competitive advantage. Huge. And why they continue to be successful now, and you would think that they might have slowed up in their profitability. Think of if we're selling tires, what do we spend money on? If we're selling tires, we spend money on the rubber to make the tires, the machines to put the rubber in to make the tires, the people to run it, and then the trucks to move the tires all the way around to the tire stores, and then we're pretty much done, I think. Right? People to sell them.
Ads.
Yeah, advertisements, stuff like that. So if you're Microsoft, what do you spend your money on? That's a question.
Nerds.
Exactly. That is your biggest expense, right? Is the technical savvy of the software engineers, probably, right?
I need you nerds to keep upgrading this until you die.
Yeah. Then what, Chris? Now I'm just going to give you a hint. It gets difficult.
All right. So I've bought my nerds. I'm going to start buying, ads. And I'm probably going to go to different companies that have computers and say, you need my stuff.
You need my software.
Yeah.
Okay. How many Microsoft ads do you see? I don't see tons. I see them kind of consistently, but I don't see them as much as McDonald's.
I think now that, because you're talking about something that's already famous, I think now it's like saying Xerox or Kleenex.
Mm-hmm. Yeah, okay. What else? Those are only two things. Keep going, big boy.
Okay. Keep going. Okay. You download it, so I don't really need trucks to...
Right. That's a good one. You're doing good.
Okay.
You really are.
I'm going to need a building.
Okay.
That houses a lot of servers.
Yeah. Big deal. It's a building.
Okay.
Yeah.
I'm gonna need to buy some really expensive salespeople and put them up in expensive foreign countries.
Okay.
So they can talk to people, so I can get my stuff over there on their computers.
Okay. Still not a big deal.
I'm not a businessman. I was
Chris,
known worldwide,
dude.
And I'm still driving a very old car,
Dude,
so I'm not a businessman.
You're doing fine. You're doing fine. Anybody listening is not doing any better than you. What else? What else do they spend their money on?
I got nothing.
Okay. You ran out of stuff they need.
Right.
Okay, you're just missing one thing, but here's the key. What do the software engineers use?
Cheetos and Mountain Dew.
No. What do they use?
Oh, computers.
Right. Okay. What does Amazon use in those data centers to run their website?
Yeah, computers.
Right. Okay. So basically, and we drill down on a computer, so I would imagine the software engineers need top of the line stuff. I imagine the data centers need pretty new stuff. So they need computing power. That'd be kind of a general term, right?
It would be really bad if your computer crapped out on you at Microsoft.
Okay, so perfect. So tell me, don't the price of computers decline like every year and a half?
Yeah.
Like big screen TVs?
Like driving a car off a lot.
Well, no, that's depreciation. You can buy the same computing power nowadays for half of what it cost you a year and a half ago.
Like thinking about even buying a terabyte wasn't even possible 10 years ago.
Exactly, Chris. Exactly. You're doing perfect. So here is something that you don't hear anybody talking about. What the cost of doing business to some of these new age, new tech companies, like a Microsoft or like an Amazon, the cost of them doing business over time is actually going down. They can buy the computing power to make every single person in their organization even more efficient. And the computing power that they're buying is getting cheaper by the minute because of Moore's Law. If anybody's gone to Costco and looked at big screen TVs, where I'm sure that you have sticker shock in reverse, unless it's some weird fancy crystal clear TV, you can get a really, really big TV for under $400. You can get a gigantic TV for under $500 or $600. Gigantic.
Yeah, I just saw like 65 inches at Walmart for like $300. That would have been insane 5 years ago.
There you go. That's what's happening to people like Amazon and Microsoft. The stuff that one of their key ingredients to their business is actually declining every single year. I don't think that that's ever happened before in the economic world. That's a huge profit driver. So when I have all these people that just say, well, the stock market's gone up for forever and things have got to slow down and all that, their mouth is running, but they've not really tried to back it up with any thought. And I can easily tend to think like that because we're all human and we're trying to think of a pattern. We're thinking, oh, God, they've kind of won a lot of times. You know, do you think they're going to keep on winning and blah, 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 blah? Well, it's not really winning. It's being profitable. So it's not like you're competing exactly against another foe that's exactly has the same resources that you do, like you would have in baseball or football or basketball, you know, stuff like that. It's a little bit different or a lot different. So that's kind of cool for us, the nerd investors out there, thinking of those companies where where their expenses could easily be dropping. And so all that computing power for Jeff Bezos gets cheaper and cheaper and cheaper. So he just keeps buying and thinking, wow, we could really, if we totally disrupted the book industry, which we did. Just think of what we could do with blah, 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 blah. That's how come he can be so bold, but that's how come people kind of crap their pants when he says something like that, because he probably is better at using computing power than any drug company, any FedEx or UPS or the Postal Service. I don't think I even need to mention that, but he's got prowess. Here's another way to think of the investment world. Why on earth would you have a building nowadays? What the hell would the building be for? You know, a retail location.
I think a lot of it now is just, oh, look, there's the such and such building. Just kind of a stature thing.
Maybe,
more than anything.
but I mean a mall. What's the mall going to be for?
True.
Yeah, I mean a lot of stuff at the mall. The one thing that I think the mall is good with is that you're buying, and my wife talks about this all the time, is that when you buy clothes off the internet, you can't try them on.
Yeah.
Okay, so that's a good way.
I've ordered stuff online, and it's 2 or 3 times before I actually get the right size.
Yeah. And it gets worse the more specialized thing that you're dealing with, because you might be dealing with some cost, and there's a kind of a little bit of a hurdle. You have to want to pay that much money. You have to trust that the transaction will go through. You have to trust that you'll get the product on time. You have to trust that they'll take the product back if it doesn't fit. There's a lot of trusting going on when you go to a store. There's a person you can deal with. I don't like this. You can have your baseball bat in your one hand and your shirt in the other. Will you take this shirt back? Oh, of course I will.
I like to go to Hot Topic and see how big the smirk is on the salesman when they go, "Can I help you, sir?"
Well, out here in the valley, have you seen that new Duluth trading store?
Yes.
Okay, and I started thinking, why the hell did they build a store? They're killing it on the internet.
That's what I thought.
Okay, well, I started thinking the first words out of my mouth, well, if they were a publicly traded company, that's the kiss of death, building a retail store. But then I started thinking, now hold on. They have a pretty well-known internet brand, but if you're not a current internet brand customer, you might not want to make that leap of faith and try on something from them, because the first thing that you get might not be your size.
Right.
So they might have done some investment, some market research, and said, if you actually put in this retail store, it might actually drive more business than you can get just solely from the internet.
It's just basically there to, hey, I want to feel the clothes, I want to look at them.
But that's important.
But then I'll go home and order them.
Or they'll buy them from the store, and maybe then after the store, they probably have they probably have trends that how long has the store been there? How long will sales go up for that store? When will the sales plateau? Will the sales ever go down from the store, but our sales from that zip code actually go up from the internet? See, there's a lot of things that they could look at. You, the listener, do you see what we're talking about now? Isn't this a hell of a lot more fun and constructive than just blindly saying, the market's gone up for 10 years, it's got to go down right now? Or I have a feeling that, some people making, I just don't like the way things are going now. I think it's going to get really bad. And I just, when people say stuff like that, I just want to tell them to shut up. Why even open your mouth? Talk about the weather or fishing. Don't prove that you're an idiot. Just make people think about that. Don't open your mouth and remove all doubt.
You're going back to the Duluth thing. I heard someone tell me once that they were in competition with, they were trying to be in competition with Cabela's. And then I thought, you know what? I always think of Duluth as an internet thing. When I go to Cabela's, I never would think to order something online from Cabela's.
Well,
because it's more of a go-in store.
It is. It's a destination.
Yeah.
But let's see, what has occurred to me? Well, Nordstrom's. Nordstrom's is a store that they kind of they're getting beat up like everybody. Their price in the stock has gone down. We only have 5 minutes left. Cool, because I thought we might have to do a short show. Well, Nordstrom's is a company that's proven that they can do internet and physical retail. They get like 20% of their sales from the internet, which is a big deal for a fancy company like that. And they service the heck out of their customers. And what else do? They have Nordstrom's Rack. Now, they don't do cheap brand name stuff as good as TJ Maxx. They don't do the internet as good as Amazon. But Amazon doesn't do retail clothing as good as Nordstrom's. The retail world is still several $1 trillion. So as big as Amazon is, they are still only getting a small fraction of everything that's going on. That's why Bezos is always saying that he can grow to the sky. But Nordstrom's is another key thing that it's fun to look at, and it's piqued my interest because I know the headwinds that they have, but the company pays, if I remember out of my brain, 3.5% or a 4% dividend. So that's way more than a 30-year Treasury bond. That's way more than they give you at the bank. And I know that there's headwinds because they're competing against an Amazon, but they're competing pretty damn effectively in their space. So that's just, it's just a discussion thing. That maybe this helps you, the listener, figure out how I think some of the time when I'm not being completely nerd. There's one article I wanted to get to here because I think people in the past, maybe not in the last few shows, how I really beat up on annuities. There's an article in Barron's on May 24th. It's how annuities can undermine teachers' retirement savings. And this guy, don't worry, I'll finish in time. This guy that wrote it by Jack Otter, he says, imagine walking down the jetway to board an airplane and making a right to head for your seat, only to have the flight attendant turn you around and direct you toward the cockpit. You'll be flying the plane today, she says. That's an excellent analogy that investor and writer Bill Bernstein uses to describe the U.S. approach to retirement. What that means is people running their own 401k. A lot of times they don't want to do that. And investing is just one component of doing things. This article goes on to explain that basically annuities are being sold to mostly teachers are huge purchasers of annuities out there, and they're being sold to them with the fear factor, harping on these teachers saying that, hey, avoid all of the bad things in the market, buy this annuity, it's going to, it's going to be less scary to own, instead of educating them. And they make a point in the article is that when's the last time you've seen a teacher making a few $1 million a year? It doesn't happen. So their income isn't the greatest. So even if they're the best savers in the world and so on, what would really help is when they invest, they actually had some performance because they really need it, because over a lifetime, their income might not be as high as other people's. That's a very good point. Well, they're not going to get typically that great performance from those types of insurance products that are meant to reduce performance but reduce safety. And the safety is kind of a misnomer. It's basically understanding. And the reason I bring that up, again, Barron's article, How Annuities Can Undermine Teachers' Retirement Savings, May 24th is the date of the article. You rarely see journalists beating up on the insurance industry's annuities and making sense. I loved it. I simply loved it. So with that, anything else for the good of the listenership, Chris? Anything you want to talk about?
No, just go ahead and remember to go to smartinvestingshow.com, and there's all the links. And
yeah,
if you subscribe or click on the Facebook, if you're a Facebook person and subscribe, then you'll get notified every time a new show pops up.
And I made the comment to Chris that there's no pictures of me on some of that stuff, so we'll have some boring pictures of me. I won't be at the Comic Cons, but you can have a picture of me reading or something, or working a calculator.
Yes, you need a calculator watch.
Okay, thanks for listening. We'll be back again next play.
Oh, wait.
What?
You've mentioned some companies and businesses.
Oh, yeah. Disclaimer. What did I mention? I mentioned Nordstrom's. I mentioned McDonald's, Arby's.
Microsoft.
Yeah, Microsoft, Amazon. Those are for just discussion purposes. In no way do I want you to buy or sell those companies just because you heard me talking about them on the podcast.
We don't know you.
Right. Well, we might, but we don't know who you are right now. So talk to me or your financial professional first before doing anything like that. Thanks for reminding me, Chris.
Hey, no problem. That's what I'm here for.
Keeping me out of jail like you always do.
Yes.
Any opinions expressed herein are given in good faith and are subject to change without notice and are correct only on the stated date of issue. Past performance is not always indicative of future results. This material is not intended as an offer or solicitation for the purchase or sale of any security or other financial instrument. Security, financial instruments, or strategies mentioned may not be suitable for all investors. Prices, values, or income from any investment mentioned in this report may fall against the interest of the investor, and the investor may get back less than the amount invested. This material does not take into account your particular investment objectives, financial situation, or needs, and is not intended as a recommendation of particular securities, financial instruments, or strategies to you. Before acting on any recommendation on this material, you should consider whether it is suitable for your particular circumstances and, if necessary, seek professional advice.